he saved 6 guys' lives in Vietnam. But he is a terrific guy, and he's helping us get access to the CEO of Progressive Software. The point is that, and Leo Hendry, who I just talked to about a month ago, one of our investors, has gotten me in to see the CEO of Verizon and the CEO of AT&T. So their network, again, it's all the network, it's all who you know. So their network, their friends, their neighbors are the guys I want access to, right? And that ends up being very useful. In Joe's particular case, a lot of it ends up being operational expertise and knowledge, and we sort of I can brainstorm with somebody I respect in terms of, what path you take, what choices you make in terms of business. And Joe also, frankly, provides me a lot of support on the conference calls with all these other guys, which is helpful because, they don't, it's like anything else. They hear somebody, people will take shots, of course, it's part of the exchange, and having somebody on the inside, if you will, adding some value in there, an objective view of things.
And we don't set it up or anything.
No, not at all, but it generally helps because then they hear Joe say something nice, then somebody else says something positive, and it reinforces it, and then the check comes. Then you ask for more money again, and the check comes. So I'm going to stop there. Any questions about any of that? Did any of that make sense? Yeah. Now I want Joe to talk about because he's more important because he's the guy you get the money from.
So he has to say that.
Yeah, that's true. It's true.
I was wondering, how did you go about finding all these people? I know networking is obviously very important, but as we were talking about, there's some serious people. How did you go about finding them?
It started off with a fountain. Well, there's two mixes of groups. In my network of folks that have raised a lot of money, right? There are certain people that I've worked with either as an investor, partners that trust me because I make good investment decisions, or for instance, that's how we got MTDC. Well, the lead of this round was MTDC. I had, as a hub angel, I had done a deal and told them not to invest and doing due diligence at MTDC. They ended up investing and didn't do well. So they called back and said, oh, we should have followed your advice. You know what you're doing. You know how to say no, right? So when I then called them up, I played poker with a guy. I play poker 3 times a week. 3 times a year with probably about a dozen VCs.
You don't mean that metaphorically. You
mean
really poker.
That's right.
The card.
No, it's true. And I don't like poker. I lose all the time. But I truly, I don't drink, I don't smoke, but I still go to the cigar parties with these VCs. You do what you do to sort of be one of the guys that do ski shooting with these guys. I'm a whore. You do what you got to do. But over time, they get to know you as a person. And actually, what I'm finding now is what I do in person now. You guys have the advantage of the social networking skills that I don't have that actually can replace a lot of it. So what I'm finding with guys that are your age, or let's say through your 30s, because that seems to be a bar, somewhere in your early mid-30s, you can get away with building those kinds of relationships in sort of a more casual way that says, okay, this guy's a good guy, he's rational, he's a good human being, I know about his kids, I know about his whatever friends. That I got to do in person and do a lot of face-to-face kind of stuff as an older guy. And you can get away with a lot of the activity with Facebook and with tweeting and that kind of stuff. I know other friends who are younger, who are CEOs, are doing more of that than going to the physical things that I do, with the old-fashioned stuff, play golf. I'm horrible at golf. So it's easy for me to let the guy win, he's the investor. But, and it does pay off, as silly as it sounds, it pays off. So I have my network over the years. I've worked with probably 40 different VCs that know me in the area. But the money that we raised originally was frankly through a guy that was an executive search guy. So the original money came, a lot of brand name guys came from a guy that was, the way the company started was a woman in Connecticut was with her son, 16 and a half years old, and the son was just trying to drive, learning how to drive, and first got his license, phone rings, both of them go to answer the phone, and he's driving, so that he drives off I-95 in Connecticut. And the mother, who was our founder, says, this is crazy, there's got to be a better answer. So she happened to work at an executive search firm. So she went to her partner and said, we've got to be able to find some people, and we know a lot of folks, who can we talk to try to get something going? She ended up finding an engineer in Florida who worked for Motorola, and her senior partner was friends, they actually had gotten a job for the guy who was the CEO of AT&T Broadband, who's now a billionaire, and so sort of owed him a little bit because he had actually gotten a few jobs, and said, listen, this is a great idea, we got to go help save kids' lives, you got to get on this mission, and it was an emotional appeal. He was also a professional driver, he actually had won Le Mans in 2005, and he's older than I am, he's like 65 or something, which is a scary thought that he's that old an athlete, he still won Le Mans, so the race, big race. Yeah. So it was a perfect match because it was a car-related, driving-related, safety, emotionally it was a good match. match for him. And, writing a $500,000 check was like lunch money. I mean, it was, and this guy felt beholding, so it was a personal relationship. And that's how it started. And Leo Hendry put his first $500,000 in, and then they used that through his network to get to the next guy. So Senator Daschle and Senator Kerry were friends with Leo Hendry. Hendry was going to be chosen for the Secretary of Commerce. It turned out to be Daley, but underneath Obama. I mean, these are serious players. And so anyway, that's how it started. And then you sort of kind of, kept extending those friendships. Who in your sphere makes sense. One of the guys that came in a year and a half ago, who ended up being ironically mutual friend of both of ours, is a guy named Bill Elfers. Bill Elfers, who's the chairman of the company, put in $2 million, and he was at Fidelity for 20 years or so he ran the venture with Fidelity. But part of his claim to fame is his father was the founder of Greylock Ventures. Completely unrelated, and never met the guy before. The company that I grew from 0 to $5.5 billion in market cap that gave us $20 million, that became a $5.5 billion company. So for $20 million, they actually owned 20%. They owned $1 billion worth. It was Greylock Ventures. So I had instant credibility. I made him $1 billion, right? So anyway, so he had come in prior to my being there. They put a lot more in after I came in, and turns out he also knew Joe. Right? Or you knew me. Yeah, I knew Joe. Okay. So there was again that mutual network. And so the point is, it's something you got to constantly be looking at and working and building upon, as opposed to cold calling. And to start in your situations, it may be that you ask your parents. My kids your age, I tell them, use me for a network. Why not use my friends for a network, and try to open up and get interest in something that's going to be exciting for them to get involved in terms of funding. You had a question?
Yeah, I noticed that in your plan, on your second page, you had your management team and your background. So, you obviously played to your strength right away in the presentation of the business plan. Do you recommend that an entrepreneur do that when looking to speak to investors, whatever that strength happens to be?
It's the number, and Joel answered this, but in my experience, it's been the number one thing that people invest in is the people, is the CEO, is trying to make sure that person is well. The maxim is this, is that you can have the best product in the best market in the world with a B team and end up with a B odds of being successful. You can be in an okay market with an okay product, but an A team, and the odds are higher because they'll figure out a way to make money.
You'll win.
Yeah, they'll figure out how to do that. And that's pretty consistently what I've seen. But Joe, I would say, so that ends up being what when I was an investor, or when I'm an investor, you look first at the management team. Second, and every investor is different. I look at the money and the management first. Can they execute? Have they done it before? Is there somebody that can build a team around them? Second thing is, what's the size of the market? If I'm going to spend money or time on anything, I want it to be big. I'm not looking to be king of a tiny market. So what has the biggest potential? That's a real market. Now, you can come up with numbers that make everything billions of dollars, but what really is addressable of what the company's trying to do. Third thing is the technology and defendability of the technology. This question about IP. Some markets you don't need IP, some you do. But where's the moat around what it is you're investing in? How easy is it for somebody else to jump in and sort of knock you out of the box? Or is this group got an idea that's defendable, and has the work been done in terms of defendability?
There are two other questions. One is, how big is the margin? Because the margin has to be broad enough first for a lot of mistakes to be made, because there'll always be mistakes no matter what the pedigree of the team. And two, because it shows you whether or not there's a single solution, which is what this is, or whether there's price competition.
Okay.
So you need to see a big margin. For me, it helps to see actual sales. Someone has actually taken $1.
Yeah, a first customer.
Yeah, or
benchmark.
and that's plenty as long as it's a real customer.
Dan, I wanted to just
I call
follow
that
up.
eating the dog food.
What's that?
There's sniffing at the dog food, you got a pipeline, and there's eating the dog food. Somebody's actually paying you money to do it.
Okay. Assuming that management team may be lacking, what can someone do to offset an inexperienced management team? One thing that I thought of is, having a solid advisory board of directors to put in a
That's
business
the
plan.
answer.
That's the answer?
You just gave the answer. It's
Okay.
getting good folks that have a lot of experience, that have possibly a brand name also that can complement. One of the things people look at again, right, what's the association? Well, this person's invested, so it must be okay for me, because I trust that they know what they're doing. This person's associated, they're an expert. So what I did when I was younger to do this, instead of my own rep to some degree, is, and then when I go, I shouldn't say that. Every company I is that if you can surround yourself with either brand names and or resources that have their own network and have talent, it makes all the difference in the world, especially as a younger and startup entrepreneur or CEO. And it's okay to mix. Sometimes what I see is some decent teams where there's a brilliant entrepreneur, but then they have an execution guy that's maybe a little more seasoned to work with that person, and that's not a bad combination. Actually, in the running of the business, you can also rent guys. There's guys for hire. I mean, there are folks that you can have, whether it's a CFO or a marketing person, whatever, that are part-time. Even CEOs.
Rent a brand, rent a name.
Yeah, you can do that to a certain degree, but that you can have on your advisory board. But even for the day-to-day work, I met with a company yesterday that was asking us to buy them. I've done a lot of acquisitions, what have you. They wanted to roll up into us. And they had a part-time CEO. The guy works there like 1 day a week, provides sort of adult supervision, I guess is what it's called. And the COO, though, was a younger guy, he's been out of school 5 years, has done a couple of startup companies, and had a really good idea. But it's a question of what else would you put around him in terms of talent. But he'd already raised $3.5 million. I mean, and he's I think graduated in 2007 or something like that. So you answered your own question. Absolutely, get a good advisory board. Find some folks that want to provide and be involved, and give them stock options, don't have to be cash.
Okay.
Any other questions?
But sometimes the best thing to do is just operate.
I'm sorry?
Start the company. Operate it.
Of course, yeah. I actually
Do it,
founded
make a bunch of mistakes, make them big and make them early, but just go at it. But no, keep going.
I was just going to say, I founded a company and we were recently acquired, and our investors were colleagues, family, friends.
Yeah.
It wasn't,
That's the way it's done.
wasn't a sexy VC.
No, in fact, family and friends is better unless you're going to be faced with Thanksgiving and Christmas.
Yeah.
That's the hard part. As long as
But it's actually,
family and friends know that they're never getting their money back. I'm serious.
No,
I'm dead serious. I have one of the investments we've made is, and we already know each other well enough. I think it was a year ago, Thanksgiving. But I know if the thing blows up, I'll be talking to Dan the next day about what happens next.
Yeah.
That it won't matter. It really won't matter.
okay.
But seriously, which makes it
And
easier for him.
I did experience that.
That actually makes it easier for Dan. It's like he doesn't need to.
Getting it from family and friends and colleagues is a different emotional experience.
Absolutely, and the key, having done that myself, is you want to make sure that you're not in a group delusion, that you're not breathing your own fumes, because every mother wants their son to succeed, so they will happily pull money out from under the mattress and give you the last dime. And what you don't want to do is have that happen. You would rather take half the money out of the mattress and some from other people, as long as they know it's never coming back. And then when it does, so much the better. And ideally it would never change the relationship you have, but it can. It can, unless there's a clear understanding about it.
Did you give some background on your fund and stuff? Because it's a little bit different than a normal.
Yeah, it's in fact, I think it's probably the best way to do it